Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now obviously we've had this big jump in bond yields in the last couple of weeks and we've had non-farm payrolls on Friday, so where does that leave us? We had a very strong headline payrolls number which suggests strength in the labour market, unemployment at levels that would suggest strengthening labour market and not far from full employment. However, we still continue to get underwhelming average wages, average wage growth. And that sort of feeds into a continued sort of lack of inflation picture. So there are still question marks surrounding the US sort of monetary policy tightening that the Fed is trying to engage. It seems as though they're engaging tightening even in the midst of sort of lack of inflation, and that is a little bit of a concern for markets. Certainly I think it's a concern for equities, which are sort of beginning to roll over. You've got these top patterns in place, and it's interesting to see if we get these markets that continue to go higher on the yields as well, on the treasury yields. Now the 10-year treasury is not a million miles away, as you can see on the chart, from this key May high of 2.42%, and I think that will be a key barometer as to exactly the market's outlook on treasury yields. So where does this leave us this week? Well, we've got Janet Yellen giving her congressional testimony this week on Wednesday and Thursday. The markets will be really looking out for any signs of what she believes of the impact of inflation going forward, the impact of continued tightening of monetary policy, her legacy arguably as she seemingly comes towards the end of her tenancy of the Fed chair, and also what the Fed balance sheet reduction could look like and the impact of it. So markets will be looking at for all those different aspects. We've got a lot of tier 1 data towards the end of this week. We've got CPI, which is inflation for the US, and also retail sales. Those are two key numbers that disappointed last month. Will that start to bounce back? If the inflation number starts to bounce back, the markets will be a little bit more confident, I think, about the Fed hiking rates in December, but it remains to be seen whether this can continue to go higher, because at the moment inflation is subdued, and certainly that's what we get from the non-farm payrolls report with the average hourly earnings, which disappointed. So where are we looking at in terms of your forex markets? Well, euro dollar has held up pretty well. It's still trading above that 113 area. That is a key breakout level, basis of support. Got a nice strong uptrend over the last 3 months. I say anything into that support is a chance to buy. Cable is a different one because it is trading in a range, and you've got the disappointment of the UK data that continues to happen. So you've got the Bank of England, which is sort of seemingly giving out hawkish signals, but in the face of disappointing data, can it actually raise interest rates? I think it's unlikely, and I think that cable is suffering on the back of that. So just rolling over as the dollar has taken a bit more strength in the last week or so. Dollar yen continues to pull higher. You've got the dollar yen, which is, or the yen, which is sort of does move around with treasury yields. Certainly treasury yields going higher, that means the dollar yen tends to push higher, and dollar yen is sort of testing the key May high of 114.35 as we speak, but it's a big resistance, big overhead resistance between 114.35 115.50 that it needs to sort of break through to really sort of open up the upside again. But it'll be a very key test this week, big crossroads on dollar yen. So what about your equity markets? Well, we've had some topping patterns in the Eurozone and UK markets, with the DAX and FTSE 100 mainly coming back to test those neckline resistance levels of these top patterns. The DAX back to 12,490 as the top neckline, and the FTSE back to 7,380. And it looks like this still could be a chance to sell, because I think that there is further room for a correction in these equity markets. Wall Street is not as corrective. The S&P 500 has held up better, but still it is posting lower highs. So I'd still be pointing out towards sort of a possible retreat back towards 2,400 on the S&P 500. on your commodity markets, the big breakdown on gold is the key event which we would be looking out for. That big May low broke on Friday on the payrolls report, seems to be confirming that move today, and it certainly looks as though that it's reopening the levels from January and March, with 1180 and 1194.50 being those two key levels. So $1,200 is a key psychological level as well. In terms of oil, it's a really disappointing little move that we've seen in oil. You had that rally coming through, you've then started to see production numbers out of the US continuing to go higher, 9.3 million barrels a day now they're up to, and also OPEC. We're still seeing an expansion of OPEC production, even though we've got these numbers or that promise from OPEC to cut production. Production from Nigeria and Libya continues to rise, so that is putting pressure on the oil price to the downside. So what about for the rest of this week? Well, mainly the event is Janet Yellen's testimony and the US data on Friday, but we've also got the Bank of Canada on Wednesday. Now this is interesting because we had the Bank of Canada joining the Bank of England and also the ECB turning a little bit more hawkish. What will that mean for monetary policy for the Bank of Canada? And we've also got UK wage growth on Wednesday as well. Wages have been dipping back in the UK at the same time as inflation rising. That sort of hits the pockets of the consumer and would impact on retail sales and general economic growth. So can wages bounce back on Wednesday? That is a key argument. But certainly I think the markets will be focusing on Yellen and also the US inflation and retail sales numbers. So with that in mind, I wish you good luck in your trading, and I will speak to you again next time. Thank you.